You just sold your business for $2 million. Now what? Here's how one couple turned their windfall into a legacy and slashed their tax bill. Picture this. You're in your mid-50s, you've worked hard, built something real, and now you've got a massive liquidity event. But here's the catch. Uncle Sam wants his cut. Capital gains, ordinary income, it adds up fast. And you're thinking, I want to give back to my church, my alma mater, but I also want to be smart about it. So what do? Think of it like your own family foundation minus the legal headaches, a donor advised fund or a DAF. Here's how it works. You contribute cash, stock, or even real estate to the DAF. You get an immediate tax deduction for the full fair market value. But here's when the legacy planning starts. You don't have to give it all away right now. You recommend grants to charities over time, whenever you're ready. Let me show you how this plays out for a couple who just sold their business. They donated a mix of cash and appreciated stocks to their DAF. Here's what happened. 1. They avoided capital gains on the stock they were going to sell anyway. 2. They got a massive tax deduction in the year they needed it most. And then 3. They created a given legacy their kids will help carry on. No setup costs, no annual tax filings, no required distributions. Pure strategic generosity. And here's what gets even better. You can donate appreciated stocks, avoid the capital gains tax entirely. You can donate private business interests even before a liquidity event. And you can even donate real estate. And if you're 70 and a half, combine this with qualified charitable distributions from your IRA, double the tax efficiency. Keep in mind that you can't take the tax benefit of a QCD and a DAF on the same dollars. But it's not just about taxes. Host a giving meeting each year with your family. Let each person choose a nonprofit to support. You're teaching the next generation how to evaluate charities, align giving with your values, understand long-term generosity. That's the impact beyond tax returns. So if you're sitting on appreciated assets in a high-income year or just want to simplify your giving, a donor advised fund might be your move. If you want to see if this fits your plan, comment DAF, DAF, and I will send you a link for more detailed information.